Hey everyone, and welcome back to the Deep Dive.
Hello.
Today we're really digging into a pivotal day, Tuesday, July 29, 2025.
That's right. Day 16 since the start of what many are now calling, well, World War III.
Exactly, and it's not maybe a declared global war like in the history books, but, the name reflects these escalating tensions, the proxy conflicts, the intense economic warfare. It's all fundamentally reshaped things in just over 2 weeks.
It certainly has. And as always, we're here to sift through that flood of information, find the underlying currents, and highlight what it all means for you.
I'm Pi, and I try to bring, well, an optimistic and forward-thinking view, looking for the innovation and resilience even when things look tough.
And I'm Nick. I tend to look at things perhaps more cautiously, grounded in historical patterns, looking out for those potential pitfalls.
Our mission today is a hardcore deep look at the events shaping this specific day. We want to pull out the key knowledge from the sources you've given us.
Offering you a shortcut to being well-informed, basically,
Yeah.
with some surprising facts and enough contrasting perspectives to hopefully keep you hooked on what really matters.
So let's jump right in. First up, global power dynamics and this massive economic restructuring we're seeing.
And what's immediately striking is the dramatic reordering, especially within the Western Alliance.
Yeah, our sources detail this US-EU trade framework agreement. It was just finalized, wasn't it? July 28th in Scotland.
Correct. Between U.S. President Donald Trump and European Commission President Ursula von der Leyen. And the terms are, well, they're breathtakingly asymmetric.
How so?
The European Union essentially opens its doors, zero tariffs for American exports. That included really competitive sectors like automobiles.
Zero tariffs into the EU.
Exactly. But going the other way, the U.S. imposes a significant 15% tariff on most EU imports. And for steel and aluminum, it remains a punitive 50% tariff.
Wow. Okay, 15% on most things, 50% on metals, but zero for US goods going in. That's quite a difference.
It's not just a slight adjustment, it's fundamental.
And it goes beyond just tariffs, right? There are huge financial commitments, too.
Oh, absolutely. The EU is committed to buying $750 billion worth of U.S. energy, LNG, and oil over the next 3 years.
$750 billion. So that's what, $250 billion a year?
Precisely. A staggering amount. But wait, there's more. The EU is also set to invest an additional $600 billion directly into the United States.
Another $600 billion on top of the energy.
And on top of that, they've agreed to purchase huge amounts of U.S. military equipment.
Okay, let's put this in context. The EU is the U.S.'s biggest single trading partner. And the U.S. already had a deficit with them in 2024, something like $236 billion.
That's correct. So this isn't just tweaking the relationship, it's a complete redefinition, a comprehensive realignment.
A massive shift, as you said.
Well, massive shift is putting it mildly. From my perspective, and echoing many European critics in our sources, this deal looks like an abject performance, a complete humiliation for the EU.
Humiliation, that's strong.
Look at Ursula von der Leyen's demeanor during the announcement. Subdued, minimal comments. It underscores the EU's position here. It felt like the U.S. dictating terms, showing the EU has, frankly, zero leverage. Despite its economic size, it's acting less like a partner and more like, well, part of a U.S. empire.
I see that perspective. It certainly puts the EU under immense strain, financially and politically. Those concerns are valid.
They are.
However, stepping back, maybe this tough agreement actually achieves something crucial. It successfully averted a full-blown transatlantic trade war.
Averted a war by conceding almost everything.
Think about the alternative, though. Imagine 30% tariffs, maybe more, across the board. The chaos that could unleash, the stability this framework provides, even at a high cost, is really important in this already volatile global situation.
So stability through submission.
And for the U.S., you have to admit, this is a huge win. It's a clear reassertion of hard power in trade. It shows that, well, tariffs can work as a tool to dictate favorable terms, boosting U.S. exports and manufacturing. It validates a certain strategy, doesn't it?
But at what cost? Not just to Europe, but potentially globally. This deal feels like a long-term shock. It's going to accelerate deindustrialization in Europe.
How so?
Think about it. European companies facing 15% tariffs to sell into their biggest market. The U.S. sales drop, profits drop. They contribute less to their economies. Maybe they even move production. It mirrors the damage from cutting off Russian energy a few years back.
Okay, that's a fair point about competitiveness.
And the energy purchases. $750 billion for U.S. LNG and oil, which von der Leyen claimed was affordable and better than Russian pipeline gas. That's just incredible.
It will be incredibly costly for Europeans already struggling with energy prices.
But doesn't it secure a reliable supply? Reduce dependence on, say, less stable sources?
Reliable, maybe, but exorbitantly expensive. And remember, Germany's big plans, rebuilding their military production, developing a European defense industry. Our sources say that bet is effectively gone. Europe is now compelled to buy U.S. weapons.
So a double hit, economic and strategic autonomy.
Yeah.
Exactly. Europe becomes a captive market for U.S. goods and arms. French PM François Brault called it a dark day. Marine Le Pen, a political, economic, and moral fiasco. They might be right.
I hear those concerns. The long-term costs, the strategic implications, they are significant. But the energy deal does provide security, which is paramount right now.
Security at a premium.
And the investments, the military buys, couldn't you see that as strengthening transatlantic ties? Shared security matters more than ever, right?
Strengthening ties where one partner dictates all the terms.
Some Irish leaders pragmatically called it a framework for deeper cooperation that was in no one's interest to avoid, implying they accepted tough terms to keep the relationship going.
Pragmatism born of weakness, perhaps.
And look at the markets. Yes, the euro slid, some jitters, but European stock markets actually rallied initially. A sigh of relief, maybe, that a worse outcome, like 30% tariffs, was avoided.
A temporary relief rally, maybe. The underlying damage is still there.
And perhaps this pressure, as difficult as it is, forces the EU to finally confront its poor competitiveness, its bureaucratic issues. Maybe it spurs necessary internal reforms for future strength. A catalyst, perhaps.
Or maybe it just deepens the decline. And let's not forget the cost to the U.S.
What do you mean? It looks like a win for them.
On the surface. But those 15% tariffs, they hit U.S. consumers too. Our sources estimate an extra $91 billion cost based on 2024 import levels. That's inflationary pressure.
Which could lead the Fed to.
Exactly. Raise interest rates further, slowing down U.S. growth and global growth along with it. And paradoxically, even U.S. car companies might suffer.
How? They get zero tariffs into Europe.
But they rely on parts from Mexico and Canada facing 25% tariffs now. And steel, 50% tariffs. It's a complex web. Winning isn't always straightforward. It creates ripples.
Okay, it's definitely a complex picture in the West, this reordering, and it's happening while there are also deep structural challenges in the East, right?
Precisely. Let's pivot to China.
Okay, China's economic headwinds, what are our sources saying?
Well, the numbers are stark. China's budget deficit hit a record $733 billion in the first half of 2025 alone. That's 5.25 trillion yuan.
A record deficit. How much of an increase is that?
A 45% increase compared to the previous year, reflecting what they call aggressive spending on infrastructure and trying to boost household consumption, basically trying to hit growth targets.
And what about growth? Are they hitting the targets?
They reported 5.3% GDP growth, which is above their official 5% target. But, and this is crucial,
Here comes the pessimism.
it's the devil in the detail. The growth is driven by surging debt, and it looks fundamentally unsustainable.
What kind of debt levels are we talking about?
Local government debt alone has doubled in 5 years. It's now at 7.17 trillion US dollars. That's 51 trillion yuan. Serious sustainability concerns, especially with the next 5-year plan coming up in 2026.
And this debt is just to keep growth numbers looking good.
Largely, yes. Keeping GDP at politically acceptable levels. But it's consuming regional budgets. It could start to squeeze essential public services. This might force profound changes in how they manage finances, especially controlling all that hidden debt. Feels like a ticking time bomb.
Okay, the debt is definitely a huge flashing warning sign. But the stimulus has worked, hasn't it? They surpassed the 5% target.
It worked in the short term, perhaps.
It shows Beijing's commitment to stability, which is vital for a country that size. It's proactive, mobilizing resources to avoid a worse downturn.
But the nature of that growth is the problem. It's linked to massive overcapacity.
Overcapacity, we hear that term a lot with China.
And it's structural, not just disruptive pricing competition. Businesses are slashing prices because they produce far more than they can sell domestically.
So it's not strategic price cutting, it's desperation.
It's what they call involution. Output grows faster than consumption. Everyone cuts prices just to move inventory. Without closing inefficient factories, inventories pile up, debt increases. It's a dangerous spiral.
Sounds like it could lead to a contraction.
Potentially a severe one. Similar dynamics to the U.S. in the early 1930s, some analysts warn. And external demand isn't helping. Even China's finance ministry admits the global slowdown, especially in the U.S., could dampen demand for exports.
The source mentioned India's exports, but that sounds like a mistake. They probably meant China's exports or global demand generally.
Almost certainly. The point is, the global economy is not stabilizing or recovering. It only remembers how to shrink, as one source put it. That's a long-term demand problem China can't easily escape. Foreign direct investment numbers confirm the unease still falling.
FDI is down 5.2% year over year in the first half of 2025. That follows a nearly 30% drop in the first half of 2024, though, so the rate of decline has slowed quite a bit.
Slowed, perhaps, but still declining. Investor confidence hasn't returned.
But maybe that slowing decline signals some stabilization. And more importantly, the authorities are acknowledging the overcapacity issue and disorderly competition.
Acknowledging isn't fixing.
True, but they're pledging concrete steps. Phase out outdated industrial capacity, stabilize prices. That sounds like a proactive policy response, a shift towards higher quality growth, tech innovation, consumption, not just raw output.
We'll see if those pledges translate into effective action.
And economists are offering clear paths forward, like restructuring state firms, bringing in private capital. It suggests there are ways to manage the debt and achieve long-term sustainability. It's complex, sure, but maybe not unfixable if the political will is there.
The political will versus entrenched interests and systemic inertia. That's always the question.
Absolutely. And as China navigates these huge economic challenges, other pressures are building both internally and externally.
Which brings us neatly to geopolitical flashpoints, particularly in Asia. Taiwan remains a critical strategic crossroads.
What's the latest there?
Well, on July 27th, there was a significant political event. A movement backed by the ruling DPP, the Democratic Progressive Party, tried to recall 24 opposition KMT legislators.
The KMT being the party generally seen as favoring closer ties with Beijing.
Correct. And the recall effort failed. All 24 KMT legislators kept their seats, preserving the opposition's 62-51 majority in the legislature.
Okay, so the opposition holds its majority. What did the markets think?
Interestingly, the markets basically shrugged it off. The THIX index, Taiwan's main stock benchmark, actually rose slightly, 0.4%. The Taiwan dollar held steady.
So investors aren't panicking about legislative gridlock?
Apparently not, at least not immediately. It suggests underlying confidence in Taiwan's economic engine, despite the political noise. And President Linga framed it positively, calling it a democratic exercise, emphasizing unity. It does highlight Taiwan's democratic resilience, which is an asset.
But there are political consequences, surely.
Oh, definitely. This is a significant blow to President Linga and the DPP. It guarantees continued legislative gridlock. It severely limits his ability to push through his agenda, especially raising defense spending beyond 3% of GDP. That was a key promise.
And Beijing's reaction?
Predictably swift. They called it proof that Li's political manipulation lacks popular backing. It gives them fresh leverage in their pressure campaign against the island.
More leverage for Beijing. And what about the U.S.?
This is where it gets really concerning for Taipei. The Trump administration reportedly blocked President Li from transiting through New York on a planned trip.
Blocked his transit. Why?
It's widely seen as a concession to China, trying to keep delicate trade negotiations on track, avoiding provoking Beijing. And on top of that, the U.S. canceled its annual defense policy dialogue with Taiwan.
Block transit and cancel defense talks. That sends a chilling message.
It signals shrinking U.S. support, absolutely. It leaves President Li politically exposed domestically. Taiwan's position looks increasingly precarious as great powers conduct diplomacy seemingly over its head, vulnerable without strong, reliable alliances.
I definitely see the concern there for Taiwan's security and Li's standing, but let's not forget the economic side.
What about it?
TSMC, Taiwan's semiconductor manufacturing company, the world's biggest chip maker, absolutely crucial to the global tech economy.
Okay, yes, TSMC is vital.
They just raised their 2025 revenue growth forecast to 30%, driven by surging AI demand, beating expectations. Their global expansion, $100 billion invested in the U.S., Japan, Germany, Taiwan itself.
Their economic importance is undeniable.
Exactly. It demonstrates Taiwan's indispensable role. Its economic vitality is a powerful deterrent, a compelling reason for global engagement. And the Trump administration's moves, maybe they're not abandonment, maybe it's strategic balancing. Keeping China trade talks on track while still implicitly backing Taiwan through its economic necessity. A delicate diplomatic dance.
A dance on a knife edge. A misstep could be catastrophic for Taiwan. And these shifts aren't just happening in Asia. Alliances are being tested elsewhere, too.
Right, like in Europe, we saw Austria debating neutrality.
Yes. Austria's foreign minister, Minel Resinger, expressed openness to a public debate about their future, including potentially NATO membership. That's a big shift for a historically neutral country, especially given public opinion still favors neutrality.
Interesting. And then Serbia. taking a different path.
Very different. President Vučić made it clear. No such bargain with the EU regarding sanctions on Moscow. Serbia is sticking to its independent foreign policy favorable to Russia, but also maintaining good relations with the EU. Balancing act.
So some nations considering closer ties to NATO, others deliberately keeping their distance.
But the push for Austria to join NATO, potentially against popular will, highlights a trend. Elites aligning with institutions like NATO and the EU, potentially overriding national sovereignty.
Or maybe it's just pragmatic national security assessment in a changed world. That open debate seems healthy democratically.
Perhaps. Meanwhile, the Russia-Ukraine conflict is clearly escalating again, dramatically.
What happened?
July 28th. Reports of 100 drones hitting Russia, especially near St. Petersburg. It forced Moscow to cancel its Navy Day parade, shut down the airport temporarily.
100 drones, that's a significant escalation.
And Germany promised long-range missiles to Ukraine. Plus, a software group is reportedly shipping 33,000 AI drone strike kits to Ukraine.
33,000 AI drone kits. The scale and sophistication are increasing rapidly.
It points to an intensifying conflict, no clear end in sight. This constant escalation, largely fueled by Western arms, it risks a much broader, more devastating war.
Serbia's stance, though, shows nations can maintain independence, balancing relationships without bowing to external pressure. That's sovereignty in action.
Sovereignty that currently aligns favorably with Moscow. And regarding those AI drones and other weapons, there are whispers, unconfirmed in these sources but worth noting, about effectiveness issues. Even suggestions some weapons might be sold back illicitly. If true, it paints a picture of a wasteful, possibly corrupt cycle fueling the conflict itself.
Concerns about efficiency and resource allocation in war are always valid, definitely. But the supply of advanced tech like AI drone kits still highlights ongoing support for Ukraine's defense. It shows innovation in military tech, leveraging cutting-edge tools. It's adapting to modern warfare.
Adaptation towards perpetual conflict, it seems.
And while these international alliances shift, internal challenges, governance, trust are also boiling over, particularly in the U.S.
Deeply troubling challenges, yes, threatening core democratic principles. Our sources mention explosive revelations, potentially coming from the John Durham report's classified annex.
Durham report. That was about the origins of the Russia investigation, right?
Correct. Hints of a Hillary Clinton plan, and crucially, an FBI role in amplifying fake Russia collusion claims. Basically, the FBI pouring oil on the fire by amplifying the lie and burying the truth, according to the source.
If true, that confirms deep manipulation within intelligence agencies, shattering public trust.
Precisely. It points to a deep state actively working against certain political outcomes.
But isn't the fact that figures like CIA Director John Ratcliffe are hinting at this, and former FBI official Dan Bongino is speaking out, a sign of transparency? AG Pam Bondi launching a strike force. Isn't that accountability in action? A system trying to correct itself.
Trying might be generous. Bongino himself sounded deeply alarmed, saying, "We cannot run a republic like this, that he'll never be the same." Yet, as critics like Alex Jones point out, where are the consequences? Zero arrests of high-level figures across multiple major scandals. Russiagate, Mar-a-Lago, Benghazi, Epstein, Ukraine impeachment.
So a pattern of no accountability for the powerful.
It suggests an unchecked elite operating above the law. The swamp never sleeps, as they say. And meanwhile, post-9/11 surveillance has become so normalized people are just used to government seeing everything. Fundamental freedoms traded for perceived security.
The lack of high-profile arrests is definitely a major source of public frustration and concern. But the fact these issues are being discussed so openly is still important, isn't it? It raises awareness, fuels demand for change.
Awareness without action doesn't change the system.
But we are seeing action at the grassroots level. Look at the State Freedom Caucus movement. In Wyoming, they doubled their members, gained legislative control, passed major reforms, tax cuts, school choice, banning non-citizen voting.
Okay, some state-level pushback against perceived rhinos. Republicans in name only.
It shows voters pushing back, making changes from the ground up. Candidates like Ralph Norman in SC, Andy Biggs in AZ, campaigning on reform. It's a sign of a dynamic, if contentious, democratic process.
Well, at the state level, some push for reform. At the federal level and internationally, fundamental freedoms seem increasingly fragile. Look at the UK's Online Safety Act.
Right, that's been controversial.
It created a National Internet Intelligence Investigations Division, specifically policing dissent on social media regarding immigration issues. Sources say it's been used to directly censor footage of demonstrations.
Censoring demonstrations.
And worse, people apparently being investigated and arrested for posting offensive internet jokes, arrested for memes. It's a chilling example of internet censorship, a crackdown on speech. Warnings from decades ago, like Enoch Powell's about immigration, are being revisited as non-English speaking populations grow in parts of the UK. It shows how deep these tensions run.
The UK authorities frame it as necessary for public safety, managing complex social issues online, preventing harm.
Under the guise of safety, free speech erodes.
But the intense public debate around the act itself shows a recognition of that tension between security and liberty. That ongoing discourse is vital for democracy, isn't it? It shows vigilance.
Vigilance against an ever-expanding state apparatus. And as nations grapple with all this internal turmoil, the global economy keeps evolving, impacting commerce and daily life profoundly.
Let's talk about that. Digital assets, disruptive innovations.
Right. The U.S. has apparently embraced crypto, at least according to our sources. New federal regulations are in place.
Like the Genius Act for stablecoins.
Yes, requiring 1.1 backing with dollars or treasuries, monthly audits. Then there's the Digital Asset Market Clarity Act, trying to define what's a security versus a commodity. And, significantly, the Anti-CBDC Surveillance State Act.
That prohibits the Fed from issuing a central bank digital currency.
Correct, due to surveillance concerns. And you see mainstream adoption signals. Trump media says it holds $2 billion in Bitcoin. Commerce Secretary Howard Lutnick personally holds hundreds of millions, expects billions.
This sounds like huge progress. Regulatory clarity, legitimacy for crypto, it opens up massive opportunities for investors, right? Accelerating Bitcoin's integration into mainstream finance, it feels like evolution, innovation.
Or absorption, domestication. Crypto being pulled into the traditional financial system, losing its decentralized edge, becoming just another part of the financial system priced and risk managed like everything else, under heavy regulation.
But isn't regulation necessary for wider adoption and stability? Look at BlackRock's Bitcoin ETF, I bet. Largest one now, $86 billion in assets. Open interest tripled this year. Nearly half of spot Bitcoin volume flows through these US ETFs now.
See, that's centralization, not decentralization. Power shifting from individuals to Wall Street, and the SEC capping contracts on these ETFs. That constrains the big systematic trading strategies used by institutions. It keeps crypto contained.
Or maybe it democratizes access, making it easier for regular investors. Coinbase buying Durbit to bridge regulated and offshore markets. That expands the ecosystem, fosters liquidity. The market's maturing.
Maturing into another regulated asset class, stripped of its original disruptive potential, perhaps. And speaking of disruption, lab-grown diamonds.
Ah, yes, China's dominance there. Producing over 70% of the world's lab-grown diamonds for jewelry now.
And incredibly efficiently. 3-carat diamonds in 7 days. 100,000 carats a month. And yes, they avoid the ethical and environmental baggage of mined diamonds.
It sounds like a seismic transformation, a total game changer for the industry. Ethical, potentially cheaper. Democratizing diamonds, forcing old players like De Beers to adapt or die. It's tech disruption in action.
But again, look deeper. China's dominance here is strategic. It's not just jewelry.
What else?
Industrial applications, lasers, semiconductors, nuclear fusion research, military tech. China is ramping up production for these uses. State-owned arms firm Noringo is involved.
Okay, industrial uses are important.
And their production machines. Super cheap, $280,000 US. But they're dually-use technology, prohibited for export. China controls a vital industrial component with military implications.
So it's about technological and potential military leverage, not just cheaper gems.
Exactly. The collapse in natural diamond demand. De Beers slashing its value by $4.5 billion is just a symptom of the strategic outmaneuvering.
Wow. That adds another layer entirely. But this disruption, whether diamonds or crypto, forces innovation everywhere, right? It pushes other nations to compete, develop their own tech. Like TSMC's incredible growth, fueled by AI demand. Innovation happens globally.
If nations can keep up, these shifts also fundamentally impact individuals, especially our privacy.
Right, the individual in the digital age, what are the sources showing there?
Delta Airlines implementing AI dynamic pricing, scanning your entire digital fingerprint data sold by brokers to set a personalized ticket price.
Personalized pricing based on my data, how does that work?
An example given. Charging you more for an emergency flight, like for a funeral or medical issue, because the AI detects urgency. It's personalized exploitation.
Charging more because you're desperate, that feels wrong. Like those past controversies with Amazon dynamic pricing or facial recognition at Walmart and Kroger?
It highlights how data security remains a critical vulnerability. The goalposts of privacy expectations are constantly moving. This isn't efficiency. It's exploiting misfortune for profit. A disturbing trend.
It is disturbing. But the public backlash against Delta and previously against Amazon and others, that suggests people are aware, right? There's a growing demand for consumer protection, for privacy. That outcry forces conversations about data ethics.
Backlash exists, yes, but these technologies keep rolling out. Privacy erodes relentlessly, and combine that with state surveillance, like the UK's Online Safety Act, policing anti-immigrant sentiment online, censoring dissent.
You see it as a package deal, corporate data exploitation and government surveillance.
They feed into each other. Both normalize the idea that your data, your speech, isn't truly private or free. And domestically in the U.S., the sense of insecurity persists.
What incidents are reported?
A shooting at Grand Sierra Resort in Reno, Nevada, July 28th. 2 killed, several wounded, a mass stabbing at a Walmart in Traverse City, Michigan. 11 wounded, an arrest on terrorism charges, assailant with a history of mental illness.
Tragic incidents, underscoring issues like public safety, mental health.
Pervasive insecurity. And then look at China torrential rains, deadly flooding across the north and east. Beijing hit hard, at least 30 dead, 80,000 evacuated, roads washed out, power lost. It shows vulnerability to extreme weather, infrastructure challenges.
Awful news from China, though President Xi issuing special emergency instructions shows a strong government response, trying to manage the crisis, protect citizens.
A crisis exacerbated perhaps by rapid, sometimes poorly planned development. And the economic indicators globally continue to paint a grim picture.
Like oil prices, still low.
WTI below $70 a barrel. Experts warn of a looming supply glut because demand is just weak. Irish GDP contracting, Indian industrial output sliding, China's deflation and falling FDI.
And U.S. gasoline demand, also weak.
Yes, significantly underperforming previous years. It suggests consumers are genuinely afraid for their jobs and incomes, cutting back on driving, on discretionary spending. That phrase again, the global economy forgot how to grow. Contraction seems more likely than recovery. Rising utility bills from heat waves aren't helping either.
Okay, low oil prices signal weak demand, which is worrying for growth. But couldn't low prices also be a benefit? Easing inflation for consumers, leaving more money for other things, maybe stimulating different sectors.
A small silver lining on a very dark cloud, perhaps.
And maybe this forgot how to grow phase forces adaptation, pushes economies toward more resilient, sustainable models, not just endless expansion, a necessary recalibration.
Or simply a prolonged stagnation. It's clear this day, July 29, 2025, is a snapshot of a world in constant turbulent flux. Every event, every data point has ripple effects.
Absolutely. So we've taken a deep dive into this complex tapestry, day 16 since WW3 started, from the reshaping of trade, economic struggles, geopolitical maneuvering in Asia and Europe to tech, privacy. It's a microcosm of profound transformation.
Transformation, yes, but also continuous turbulence. The deep structural issues, debt, overcapacity, geopolitical knots, eroding privacy, they persist, they fester. It often feels like a relentless cycle, old problems in new clothes, creating perpetual uncertainty, underlying chaos.
I see the turbulence, definitely, but I also see those threads of ingenuity, resilience, adaptability, digital asset innovation, disruption forcing industries to evolve, the push for transparency and accountability, even when it's hard. That shows potential for growth, new solutions, maybe a better tomorrow.
A better tomorrow that seems perpetually shadowed by the problems of today. The more things change, the more some fundamentals seem stubbornly resistant to real improvement.
It leaves us with a lot to think about. And for you, our listeners, here's a final provocative thought to chew on.
In a world where information itself is a battleground, where your personal data is a commodity and power constantly shifts, how will we even define truth in the future?
And what new forms of resistance or maybe adaptation will emerge as humanity navigates this future, shaped by both unprecedented control and unbounded innovation?
Something to consider.
If you found value in today's deep dive, please do like and subscribe to the Deep Dive. Your support really helps us keep unraveling these complexities.
You can also contribute directly via our GoFundMe page if you're able.
Thank you so much for joining us.
We look forward to our next deep dive.